Hello, everyone. This is the Free American Press with your host, Alexander Horat. Before we begin, if you could please subscribe to the channel and leave a like on the video, that would be great. Today, we were having Lobo Tiggre on the show. Lobo Tiggre is a renowned commodities and macro strategist known for his sharp insights on precious metals, copper, and global market trends. He has spent years analyzing inflation, currency movements, and geopolitical risks, helping investors navigate uncertainty and uncover opportunities in gold, silver, and industrial metals. Hello, Lobo. We're really thankful to have you on the show.
Thank you very much. That was quite the mouthful of the introduction. I really just think of myself as a due diligence guy.
Well, that's really great, and we definitely need more people to do that because unfortunately, many people don't do their due diligence. So it's definitely you're a rare breed in that for sure. So gold and silver has surged rapidly recently. In your view, what is the primary driver? Global central banks buying, geopolitical risk, inflation, or something else?
Yeah, I think the global central bank buying is huge. That's really, really important. But I don't actually think that's the driver. They're certainly not trying to push prices up. They're trying to accumulate. If anything, I think they're the new dip buyers that have put a floor. So something else is causing it to ratchet up, and the central banks are preventing it from falling. Like it ratchets up, but then it doesn't go down much because I think the central banks step in and buy those dips. The something else is, as always, it's never quite simple. There's no one thing. I think it's a combination of the above of what you said. I do think the big story, the long-term big picture, the macro is the debasement trade. And it's really funny that, gold bugs have been talking about this for 50 years. And now suddenly it's become a trade on Wall Street, the debasement, like they just discovered currency debasement, that fiat actually, has no backing. Um, but I do think that's part of it. The late great Richard Russell, when people called him a gold bug, he used to retort, "No, I'm not a gold bug. You're a dollar bug. That's the real, you know." Somebody today just I posted something about an AI bubble, and somebody snarked, "Oh, gold is in a super bubble." And instead of getting offended, I wrote back and I said, I think really the mother of all bubbles is the US dollar and the whole fiat experiment. If that blows, everything goes.
That's
And
true.
I'm not digressing. This is actually the answer here is ultimately that's what it comes down to. Gold as a store of value, more time tested than Bitcoin by a little bit, right? Is giving you it is the yardstick of the debasement of the depreciation of the dollar over time. And sure, it's volatile, long and variable lags, all that stuff to the various policies. But pull back and look at a big picture of gold versus the dollar since Tricky Dick Nixon slammed the gold window shut in 1971, and it's a giant X.
Yeah.
And to me, that's really all you really need to know about this in terms of fundamentally what's going on. Short term, the wiggles. Will the Fed cut 25 basis points? Yeah, it matters on the margin, but not really for the big picture.
Yeah, so on gold and silver, what's kind of your price targets for next year? What's kind of your gut feeling?
As I said, I'm a due diligence guy. Okay, you want a price target? Let's see. No, I don't do price targets.
Okay.
I, as a speculator, I'm happy if I can just get the direction right. And
Yeah.
maybe I'm obsessive compulsive and I hate being wrong. And if you give a price target, you will be wrong.
Yeah,
So
that's
direct
true.
upwards. And actually, for me, as a cautious, disciplined due diligence guy, that's really quite something to be saying that I think directionally we're looking at upwards from $4,000. The mainstream thinks, oh, gold's in a bubble, $4,000. That's really high. But if the big picture that we just talked about is true, the real question is, well, are they going to start printing fewer dollars? Are they going to reduce the money supply? Why would this multi-decade trend end? It can fluctuate, but why would it end? There's nothing on the global scene, and it's not just the dollar, but all the fiat little pieces of paper we imagine are money, right? There's no end. As Lynn Alden likes to say, there's no stopping this train, right? So so when people say, Lobo, would you really buy gold at $4,000? Well, if I didn't have any, I sure would. Um, and I wouldn't sweat the volatility along the way because ultimately nothing stops this train. It's a one way, you know, the the money printing never stops until the currency blows up and gets replaced. So that's bullish gold. Now, if you ask me where we'll go this coming year, what my price target for 26, I'm just not going to do that. It could easily fluctuate downwards. It could be that we've got a bit of a plateau here and that it consolidates and corrects for some time before going up again. Even if we're looking at a giant head and shoulders, who knows that this isn't the head, right? Is what I'm saying, but I don't think so. I think it's another shoulder. And if 4,000 is like what it was at 3,000 or 2,000 when it consolidated for a while, there was quite a volatility. After gold hit 2,000 in 2020, it dropped down like $300 at one point.
Mm.
And so if it did that now, that'd be a $600 drawdown, which takes us to, I'm not a technical analyst, but the Fibonacci guys talk about 37, 38. From almost 44, a $600 drawdown would take us to that same level. So what I'm saying is that would be nothing scary. That would be what we've seen in this recent bull market, uninterrupting the market. If it goes down more than that, then that'll be more significant. Long story short, I think it's going upwards. I don't know how long this period of consolidation will go, but the longer it goes, the less it looks like a peak and the more it looks like a shoulder, and the next big move will be upwards. And that includes silver in that too.
Yeah, I definitely understand why you don't make a price prediction. There has been a lot of people who made price predictions in the past and they've been incorrect. So I get why you would do
I
that.
hate being wrong.
Yeah,
It's easier to be right if I get the direction right.
that's definitely true. So you mentioned that we're in an AI bubble. Why do you think we're in an AI bubble?
Well, for one thing, just valuations. Trees don't grow to the moon, right? So just on a fundamental basis, if it's going to take 50 years for a company like Nvidia to earn into its market cap, are you going to tell me there's no innovation in 50 years that could displace it as king? Right? Even like they're pushing back. Nvidia, the CEO today, Jensen Huang, said, "Oh, we're no Enron. Like we have a real business here." Okay, that's fine. They have a real business. They're selling these chips. They're sold out. Great. The next DeepSeek moment could completely torpedo the whole thesis. What if we don't need those GPUs? Like right now, the other headline today is that Google is selling, apparently they've just got an agreement with Meta to sell a bunch of their TPUs instead of GPUs. Like, who knows what headline tomorrow could radically change the whole business model for NVIDIA or the whole AI thing. So I think at the very least, it pays to take out insurance and not just assume this has to keep going higher, higher, higher. And I'm not an IT specialist either. I kick rocks for a living, but I look at what we call AI today, and it's not intelligence. It's at best a smart system, an expert system. I'm not saying it can't be very helpful. I'm not saying there aren't a lot of jobs at risk, but it's not actual intelligence. It's guessing at what the right answer is, and it's really good at guessing. That's not the same as thinking. If we get to this artificial general intelligence, that will be an interesting day. What the implication? But what if that is not built on LLMs? That tool, the LLM, is guessing for the right answer. What if that's a dead end, just completely the wrong way to go about solving this problem? And right, you and I, the gray stuff between our brains does not consume the entire output of a nuclear power plant. It does not read everything on the internet to guess at what the right answer will be. Obviously, there's a slightly more efficient way to go about intelligence than what these LLMs are doing. So if that's the wrong path, and the new path is something much more efficient, and it doesn't take a football stadium full of GPUs, I think AI conceptually is the real deal. And it is game-changing, transformative, as impactful as the internet or the industrial. I think all of that is actually true in time. I don't think we're there yet. And there are huge questions about the specific technologies and solutions to get there, and the companies implementing those. Like the hundreds of billions of dollars we're spending to build giant NVIDIA GPU farms. What if that's not well allocated capital? What if it's the wrong path, right? So that would be bad enough. If it was just tulips might not be worth 100,000 guilders per bulb, that would be bad. But with so much, like the markets are up and up, 25% gains 2 years in a row. That's because of the Mag 7. So if they blow up, the markets blow up, the wealth effect goes into reverse. The whole economy takes a massive hit because it's not just this one little niche thing. It's that one pillar that everything else is standing on. Doom and gloom here. I'm not predicting an imminent market crash, though I would certainly want insurance in case that is what's ahead.
Yeah, definitely. And I think you're right. It would definitely have huge effects on the market if there was an AI bubble crash. So what type of insurance should people be taking in an AI bubble crash event?
I just tweeted about this today as well. Michael Burry has his new Substack, and he's famous for The Big Short. And the problem with going short is that even if you're right, if you don't have the timing right, you lose. Like if you buy options and you go short on the options market, those options have an expiry date. And so if your prediction, you could be 100% right, but it happens the day after your options expire and you're screwed, right? You are out a lot of cash. So um, I'm not a bit, maybe smarter people than me can figure out, maybe Michael Burry can figure that out and they can make billions shorting the market darlings. I'm not going there. The simplest form of insurance, of course, is bullion. The beauty of owning gold and silver bullion is that there's no expiry. You know, it, it is that financial asset, the long for which there is no short. There's no counterparty risk. There's no expiration date. And sorry, silver bulls, gold doesn't tarnish. Right? You can hold it for centuries. We dig up treasure ships that sunk hundreds of years ago, and it's worth all this money because of the not just the historic, but actual the intrinsic value of the metals themselves. So that's the easy answer. If if I'm right about that and you want a bit more risk, but you still don't need to have the timing perfect, then you can go along the gold stocks. And the easiest ones would be ETFs or the majors that they're going to move with gold with some leverage. And then you can go down the food chain to the mid tiers and the juniors that have more hockey stick potential, whether you're trying to make money or preserve money. It's a different choice there. But that's to my mind a very not. I mean, gold bug likes gold. That's not much of a headline for you there. But if you think of gold as a safe haven asset, as a stable thing that you can hedge your portfolio with, um, I just think that makes a lot of sense. If we're talking about an epic bubble blow up of the proportions that are really economy shaking, sure, everything gets whacked at first, including gold and silver. And maybe that's the time to buy. Like if you're not sure what's going to happen, you think 4,000 for gold and 50 for silver is kind of rich. If this blow up happens, everything will get whacked, including gold and silver, and that would be an excellent time to step into that marketplace. Now, it might not happen. It might just be that we consolidate, go higher. So I would not want to be short in the sense of not short contracts, but short in the sense of left behind on bullion at this point.
Yeah, that seems to be good insurance in case there's a AI bubble that blows up. So that
Or
definitely,
anything else.
or anything else. Yeah, that's
Right? Rainy,
definitely
rainy
true.
day fund.
Yeah, that definitely makes a lot of sense. So I have another question. Do you believe the official inflation numbers are accurate, or is the real rate of inflation much higher than reported?
No and yes. Now, interestingly enough, there is a private sector alternative to government inflation statistics. There are several, but the one that's getting a lot of attention right now is the so-called trueflation stat,
Mm.
where they're collecting real-time data on actual prices on, I don't know if it's hundreds or thousands or millions of, it's like it's an internet thing, right? They have a giant bot that goes out and collects these prices and calculates the change. So that, assuming they're not lying or cheating in some way, like that's real. Those are actual price changes from moment to moment, month to month, year to year. Problem is it's only a couple years old, so there's not a lot of historical data or trend data to go on there. But anyway, that trueflation number, the last I heard was like 2.7 or something.
Mm.
So do I believe the government numbers? Of course not. Do I think, it's shadow stats twice that number is right? I don't know. Trueflation suggests that it's not. But I think at the end of the day, what's happening at any given moment is less important than what's happening over time. And that goes back to the beginning of our conversation. The debasement is real, and it's not just the dollar. So it affects all of them. The money printing never stops, and long and variable lags. So trueflation right now doesn't necessarily tell me what will be the consequences of the big, beautiful bill over the year ahead. And we'll just have to see. But my general sense, I think, is in line with what people experience when they go out in the world. Things are a lot more expensive. But here's another thing that economists just, this is one reason why I'm not an economist. Like, they have their theories and they have their ways of looking at things. And one of the ways is this whole idea of inflation, the way it's framed by modern economics, is it's a rate of change. Right? So if prices are not changing, even if they're very high, but they're not changing, well, we have no inflation. That rate of change is zero. So economists can look at really high prices, ruinously high prices that are driving families broke, and say, oh, but they're not changing, so everything's fine. We have no inflation. Like, that's clearly not what people experience in the real world. And so, yeah, I have criticisms. I don't pretend to know what the real numbers are. I don't trust the government numbers. And I think at the end of the day, what matters is cost of living, and what people are experiencing tells us something about what's going on in the real world.
Yeah, I definitely agree with you. I don't trust the government numbers either. So, looking at some kind of geopolitical or things going on, we see with Japan's yen weakening and a $135 billion stimulus recently approved, what ripple effects do you see on gold in the global markets?
Let me just sort of pull back and say more conceptually, big picture. The the money printer go burr, that's not just a US thing. It's a global phenomenon. And Japan, okay, they've been the odd man out. So it's a bit of a weird one to ask based on what Japan is doing, because where most of the rest of the world has had one problem, Japan has had an opposite problem recently. But yes, it's interesting that they finally got inflation after all these decades. They finally got inflation, and now they're trying to balance struggling with that, but also the weakening economy. So it's sort of telling that they're doing stimulus, of all places that Japan would jump into that ring. But again, Japan is Japan. The bigger picture from my view is the big, beautiful bill, the whole Trump rebuilding America's economy. Whether you agree with it or not, this is not a criticism of the agenda. The point is that that agenda is inflationary. And sorry, Doge did not save $2 trillion. And sorry, giving people no taxes on tips and overtime, that's very nice for those people, but that doesn't help balance the budget either. So if you're going to spend trillions more and you're not going to cut spending, that's inflationary.
Okay.
That's part of the debasement trade. So and Europe, you've got Europe remilitarizing, trillion euro military spend building up over there. That's inflationary. Russia's war is inflationary. China has been struggling with reported deflation for some time. I think that's just a temporary thing due to all those things that they couldn't sell to the US for a while. Suddenly the market is flooded with cheap stuff. But they recently were able to, yay, report positive inflation. Our money is getting worth less. How successful we are. Right? So Japan is an odd thing, but you just look at the global trends overall, all paths lead to inflation. And that is very bullish for anything real, not just monetary metals, gold and silver, but real estate, industrial bases, iron, copper, anything real that governments can't print. Volatility aside, there's an upward trend ahead based on that, the biggest of the macro trends around the world.
Okay, that definitely makes sense. So a question for that I got for you is in the United States, are we currently in stagflation?
Well, I think so, but it sort of depends on which part of the economy you look at. Here's another thing. Again, I'm not an economist, but just bear with me for a second. Part of the problem is that we look at the US and we have these national statistics, the unemployment rate, right, or the inflation rate, or GDP, these big national figures. The problem with an average is, suppose that you've got a bunch of people that score 1 and a bunch of people that score 10, and you average them and the average score is 5. Well, gee, it's in the middle. Everything looks okay. But the reality for the people scoring 1 is it sucks. And the people, that's a technical economic term. And the people that have the 10, well, life is great. Woohoo, champagne and caviar, right? It's the K-shaped economy. So you average the bars of the K and it looks okay. But the reality is some people have been making tons of money on all this money going into the stock market, the AI bubble that we talked about, all this stuff, champagnes and caviar. Whereas the average Joe over here is like, hey, wait a minute. And you know, this was really so visible. This is why Biden lost. Like all the economists are out there saying, why doesn't Joe get any credit for a great economy? Look at these numbers. Everything is fine. Well, it wasn't fine. The average looked fine, but the bars of the K were a completely different reality. And there are more people on the bottom part and they vote. Right? And so that reality hasn't changed with the occupant of the White House. So if you're on the bottom part of the K, we've got inflation and you've got at best stagflation, if not actual recession for the bottom part of the K. And that's the yes part of the answer. If you're an Nvidia shareholder or a Bitcoin hodler and you're up, 10x over the last few years, okay, maybe you'll only buy one Lamborghini this year instead of two, but you're not suffering. And that doesn't look like stagflation to you. So I don't mean to speak out of both sides of my mouth, but I do think that there's a difference here given the K. And I think that's well substantiated. I don't need to spend a lot of time defending the K. Even mainstream financial media begrudgingly admit, the K-shaped economy it's a thing.
Can you explain what a K-shaped economy means?
Well, if you have a chart and, you have either the zero, there's a vertical line that's part of the K, and then the chart, if part goes upwards and another line goes downwards, then it looks like the letter K.
Mm.
And so whether it's, the net worth or the spending of the individuals that are benefiting, the high net worth or higher net worth individuals that are benefiting from the AI hype and all these other things, the first people in line for the money spigots from Washington, they're on the upper bar of the K, the upper line on the chart. The average working Joe or Joanne, not so much. And hence the letter K.
Oh, that makes sense. Thank you for explaining that for me. So, what's your outlook for copper amid today's supply constraints and energy transition demand?
Yeah, this one is really causing me to wrestle. I'm very, very bullish on copper overall. I mean, it fits the thesis of what we were just talking about. Anything real, like governments can't print. It's essential. There are many uses for which you cannot substitute something else for copper. You got to have copper. I mean, we call it Dr. Copper for a reason, right? It supposedly has a PhD on economics and it's an economic indicator. But therein lies the pain as well as the glory, right? If the transition that Trump is attempting to implement on the US economy, even if it goes well, it's a transition period and there will be volatility along the way. I don't think you can accomplish what Trump is setting out to do without any pain. And then there's the stag part. If the lower part of the K starts weighing more heavily, that would also weigh on anything economically sensitive, including copper. So my outlook is overall bullish. Near term, because I'm concerned about the economy, it's not exactly bearish, but the way I phrase it is I'm looking at a probability of a buying opportunity. But then you have the supply constraints that you mentioned. And 2025 has been an unusual year in that we've had, unfortunately, mining, even with modern technology and satellite sensors on your pits and heat pads and all this stuff, it's still dangerous. Like you can't entirely control and predict Mother Earth, and people die mining every year. Unfortunately, 2025, even if you follow best practices, it's just you cannot do this dangerous business without some people getting hurt.
Mm.
It's like driving. Like, some people are going to die on the roads this Thanksgiving, but you can't not drive, right? You've got to get to grandma's house for Thanksgiving. So it's just one of these things about life. But anyway, in 2025, we had an unusual number of substantial accidents. And not only, the fatalities, as bad as those are, but also accidents that took production offline, like major accidents that impacted supply from big players. So on the one hand, I'm concerned about the stag part affecting copper prices in the near term, which would create this buying opportunity. On the other hand, we've had these unfortunate series of events that have taken copper supply offline now, and that's constrained supply, and that's kept copper elevated. Which one of those two works out stronger? I don't know. It looks like for now, the supply constraints are winning. We only have a month and a bit left in 2025, and copper's done great. But and until we're out of the woods, until I can look at the situation, the economic situation, and say, look, the worst of Trump shock is clearly behind us, and it's off to the races. That makes me hesitant to pile into copper until that shock is gone. And the bad news is, like, if the bottom is already in, I'm going to have to pay more when I do go long in copper. The good news is I'm so bullish for such a long term that I'll still make a ton of money. If I have to pay twice the prices I could pay today in, let's say, 4 months, I'm looking at like a 5 to 10 year bull market. I would still be able to make a bunch of money if I do that. So, long story short, I really, really like copper for a bunch of reasons we didn't get into, but I think most people probably know. I'm hoping for a buying opportunity in the near term. If I don't get one, I'm planning to just go ahead and buy anyway.
That definitely makes sense. Copper is very important towards the global economy, so it makes sense that you are think that's a good investment. So, going into something else, we saw Bitcoin has dropped about 20% recently. Do you think we're witnessing the beginning of the end of Bitcoin, or is this just part of a cycle?
I don't know. Bitcoin's death has been greatly exaggerated a number of times. It could be this is just the latest cycle, right? I'm not an expert in this, but it goes up in front of the halving and then the halving, and then it draws down 50 to 70%, and then it goes off to a new all-time high. That's been the history of Bitcoin thus far. What is different this time is that you've got much more mainstream buy-in. You've got Wall Street, you know, dove in head first, both hands dove into the crypto space. And I don't think Wall Street is going to hodl through a 50 to 70% drawdown, right? If you're a Bitcoin maxi and you think that Bitcoin, like the one ring of Sauron, will bring all together and unite them in Mordor, that would be the one currency left standing at the end of the story. If you believe that, then it doesn't matter how much the price goes down. You just hodl right through it, because at the end of the world, you know that you're going to come out ahead. But if you're Wall Street, you're not going to do that. You've got a portfolio, you've got performance, you've got shareholders to answer to, or bosses to answer to on your quarterlies. So what I'm saying is, like, even if Bitcoin turns out to be the only money left standing in 20 years or whatever it is, a drawdown now could not just spark panic, but could spark huge selling, like big numbers here. Deep pockets from Wall Street start selling, and that could make it not a 50 to 70% drawdown. That could make it like a 90% drawdown or something. I mean, it could really test people's faith going forward. That's not a prediction. I'm just saying that's a possibility. That's one way it could go. Or who knows? Donald Trump could announce the Bitcoin strategic reserve is buying on the open market tomorrow, and Bitcoin goes to 200,000. Like, either of those could happen.
Yeah.
So I see it as, at best, a gamble. I don't call it a speculation. To me, a speculation is where you imply your due diligence, your intelligence to making a bet based on trends in the markets that you can see. This is more of a pure gamble. And if you want to gamble on Bitcoin going to the moon tomorrow, I mean, I won't tell you that it won't happen. But there's no way to estimate the odds. So I'm not interested. I don't own any. I have no plans to buy any. I'm happy to watch it be a train wreck without me on board, if that's what happens, or I'm happy to watch it take off for the moon without me, if that what happens. I feel no FOMO in this space whatsoever.
Yeah, that definitely makes sense. I think that's a good outlook. So you mentioned that it's good to have insurance in gold. And that you're also looking into getting into copper. So what other types of investments do you think would be good for investors to get into in the coming years?
With the latest market action, actually, the most interesting one right now And there are other things in the world more than metals in mining, but that's my wheelhouse. I focus on metals in mining. And so I'm not poo-pooing anybody else's idea. But in my space, one of the most compelling sources of opportunity right now is actually uranium. You know, like copper, there is no substitute. Maybe someday there'll be thorium reactors or fusion will replace fission and all. But right now, the world is building uranium powered nuclear power plants gangbusters. Like China is looking to double their reactor count. The United States is now on board. Um, you know, even Germany has said maybe we shouldn't have shut down all those reactors, and Japan is restarting theirs. Like so, this trend is super powerful. There is no substitute right now. Um, there was some concern last year and earlier this year that high prices would cure high prices because there was low hanging fruit, mothballed mines, and that sort of thing. The uranium market, it's not OPEC, there's no cartel, but it has a few big producers, and they've all voluntarily cut back production because uranium prices were low. So there was a reasonable concern that uranium prices, now that they were higher, that production could come back online and push prices lower. And to a degree that has happened. But the interesting thing is that it's turned out to be much harder to bring that supply back online or to build a new mine. The two biggest producers in the space, they both moved the goalpost. They failed to achieve their previous goals of ramping back up again. And on the smaller companies, some of them are late, some of them are behind, some of them are cutting their production guidance, some of them have failed completely. Like the idea of the low-hanging fruit was going to flood the world with cheap uranium again. I think we can put that one behind us. So that makes uranium particularly interesting to me now and in the year ahead. I like it a lot. And in fact, my last two stock purchases were uranium stocks.
Oh, do those uranium stocks pay a dividend?
No, I'm not a dividend sort of guy. I'm looking for capital gains. I'm
Okay.
looking for hockey sticks. I'm still young enough, despite my silver beard. I'm still young enough that I'm looking for capital gains rather than wealth preservation. If I was a more cautious speculator but bullish on uranium, I might just go with an ETF or something like that. Bet on the metal itself, much less risk. Um, but smaller companies that have that hockey stick potential are more my speed. And no, I'm not going to tell you which ones. That's what my clients pay me for.
Oh, definitely. Yeah, I don't expect you to tell us that. That's definitely really important information. You should only share that to clients that are willing to pay you for it. That's definitely important. So I'd like to take the time to share the screen to show Lobo's website, theindependenspeculator.com. He has a lot of really great articles, the case-shaped economy, which we talked about, and a lot of different great things, and and he has his services that he does. Would you like to tell the audience about your services?
Well, if you scroll down, you can see our pricing and things. And I would actually focus on the free one. Like if this is your first exposure to me, sign up for the free letter. You get one email per week notifying you of publication. I hate spam. You don't get flooded with advertisements and sales pitches and stuff. You get one notification per week. You can see my latest thinking on the markets and my marching orders, what I'm speculating on now. Not the stock picks, but the direction I'm going. And if you like it, you might consider hiring me as your due diligence guy via my other online services. But the free one's a no-brainer, and it's an easy way to test drive, kick the tires, that sort of thing.
That definitely makes sense. And you can also follow Lobo on X. He has a lot of great posts on his X page that I think are really good. I'm following him. Definitely all the people who are watching this, please follow him on X. And is there anything else you'd like to include in this video?
For those who hung on after the sales pitch there, I would just say, look, I think this AI bubble business on this is really serious. I'm not one of these people that are constantly predicting the market's about to crash, doom and gloom. I'm not a sky is falling kind of guy. Um, and we've just seen last week, major market volatility and then lots of money stepping in to buy the dip. So I'm not at all convinced that things are about to blow up. This is it. But if it does, if the AI bubble goes, that is a really big deal. So I really encourage people to take that seriously. It's
Sorry
okay.
about that.
No, that's fine. but I'm just wrapping. I'm just saying today, who knows? Nobody is that close to the land in first world countries. So I'm not calling doom and gloom. Again, if you have insurance and you never use it, great. But if you are not prepared, if you're caught blindsided, the consequences for you and your loved ones can be very serious. So I just think that this is more than just about money. It's something that people ought to think about their lives and how well prepared am I for turmoil ahead.
I definitely agree, and I think it's great that you're telling the viewers to take out this insurance. That's definitely going to protect them financially if there's a coming financial storm. So I think that's really great. And I would just thank you, Lobo, for coming on the show and providing all this great insight today. And definitely would like to encourage everybody to check out his website and his X account. And I would just like to hope have you on the show again.
Thank you. It's been fun.
Yeah, thank you all to the viewers for watching. Please subscribe to the channel, leave a like on the video, and share this video with all your friends. Thanks again for watching. Hope you all have a good day.